Okay, a quick one on BTC. I'm going to break out everything on my chart and restart again. Okay, I'll talk on BTC and ETH real quick. Now let's talk about BTC first. Uh, so I'm going to have a breakdown from, like I explained from the room. I do multi-time frame analysis starting from the weekly. Okay, weekly down to daily H4. Okay, and prayers maybe from H4, I just filter noises and check on M30 and M15. Okay, so basically from the weekly, what can I say? BTC broke the last higher high here, which is the all-time high from the weekly, and then I mean broke the all-time high, and then we had a rejection, a very strong rejection just after BTC broke the all-time high. And the rejection shows sign of bullish weakness because you can see from here, price got declined. That's why you have this candlestick so long, and later came to settle down at 61%. That's a bearish intent from the weekly time frame. Okay, so now what does that tell you from the overall view? From the overall view, the weekly time frame has been trending upward recently, which is starting from here. It switched from a downtrend. This was a downtrend, and then it broke up to start a new uptrend, which is impulse, a retracement, a new impulse. Now this impulse has ended here. It is crystal clear that this impulse has ended here. So what you expect now is a retracement. And like we said, when the retracement is ongoing, what you should do is to use the Fibonacci tool, okay, to check the possibility of where that retracement is likely going to get to before a reversal will take place. And now when you measure the Fibonacci tool, you see now that the 50% discount is lying around $53,000. So where that's my second point of view. But if you go and add the 38% region to your file, if you add come on, trying to set up my file. Okay, if you add the 38% region to your file, you see now that the 38% region lies around $56, which is closer to that $57 I was expecting here. So basically, what I'm expecting is 2 POI to engage this pair around $57,000 and also at 53,500. So let me show you this whole region. So the first region is here from the Fibonacci level. I mean the second region is gotten from the Fibonacci level, which is an expectation from um, a pullback perspective. That is, market should pull back at least 50% of the impulsive movement. Okay, this market moved by how many percent upward? So it should pull back by 50% of that impulsive movement before we create a new high that should probably be around $76,000. So now, because I don't base my strategy on one perspective only, now what I'm going to do is, viewing from the smart money perspective, what can I see? Viewing from the smart money perspective, what can I see? I switch now to my daily time frame. And now what I can see on the daily time frame is that fine, the market is still maintaining the upward movement. Only that there's an order block here that made the market to break above this particular structure here. So sort of like this, a BOS, a break of structure to the upside. Okay, BOS. Um, so what we are expecting is that the BOS order block should be mitigated, and that's this tiny block here, this candle here, and that's where market is currently reacting to. So what do we do when market has come into this order block itself? We refine the order block by going to a lower time frame. Now going to a lower time frame, you see more of the refinement of the order block as this candle here. This is the candle that appeared before the long push to the upside, and that's how I explain the market makers and how they work. Okay, so now what can you see? The market clearly tried to mitigate this order block, but it has not mitigated it fully enough. You can see the wick. The wick actually did not touch it. Let me change this thing to arrow. Okay, the wick has not touched it, and this is why I'm expecting a dump. Now, when I refine it to H1, I now refine the other block more lower to this place. You might want to ask what's another block, whatever. But that's just my strategy. So this is why I believe that this market is still going to dump more to somewhere like 57,300. But I'm using 57.5 as my entry. I don't want to buy, try to wait for a sniper entry. Okay, so this is what I'm expecting. You might just have a pullback on BTC now and a dump to this place. So I'll pick my first entry from here. One. Okay, that is based on the perspective of this other block I just break down here on the daily time frame, based on this valid order block that we had here, and that's what the market has been obeying since. Now, if that other block should fail, what will happen? If that other block should fail, what will happen? Now, back to the daily. If this other block fails to hold, if this daily order block fails to hold, if this daily order block fails to hold, the market will only fail to respect this daily order block because it has spotted liquidity line below this region here. Okay, a lot of stop losses are going to be lying below this region. Yes, because people that will be buying based on this structural retest, because some persons now will say this is a breakout of this resistance, so market has come back to retest it. So they will buy from here and they will put their stop loss below this structural level. So because of that, market will likely come to what? Take out this structural level. And that is why we say this level is like a liquidity level. So you can call it, I used to put this stuff like this. When you see this dollar added to my chart, it means that that place is a liquidity level. Now, clearly, if you check on H4, you see that it's actually a liquidity level. Why? Because it's a valid support level that people will likely want to buy from here if market mitigates this region. So that means a lot of stop losses will be placed below this place. People will have their orders set like this. I want to buy at this support because it's valid and my stop loss around here. So when markets decide to fail this first entry here, which is our 57.5 region, is our first order block. Remember 57,500. We engage here for spot trader, engage here, and if this one fails, the market is likely going to come down because it wants to work liquidate people that have their stop loss here. And the price of liquidating, the market is going to come down to this other block here. And when the market comes down to this other block here, the reason to come down to this other block would be to liquidate these people, like I said. After liquidating them, to use that opportunity to mitigate this other block. That is using one stone to kill two birds at the same time, and then we'll have a spike. So for spot trader, buy at 57,500 and set another buy order, which is your DCA at 50. I don't like putting my orders as sniper in case the market wants to get me left out. Okay, put your second order at $52,000. I will check back on this. I'll make sure I monitor this and I'll give results on how this thing plays out in the next between now and on Monday. Yes. I don't need to, won't take that long, but between now and on Monday, let's see how it plays out. So the same setup is what you have on ETH similarly. So when you check on ETH has actually not created a new all-time high though, but when you check on ETH higher time frame, we'll have what we call a quite significant price movement to the upside. So you are not expecting a much more retracement from the weekly. So I go to the daily time frame, and when I go to the daily time frame, all I could see here is another block around this region that the market has not clearly mitigate when I refine it to the H4. Now, when I refine it to the H4, what I could get was a refined order block around this place that was not fully mitigated, and that's the other block here. So what I'm expecting is that when BTC is going to 57, ETH will come inside this box and blast off. That's if BTC will obey that first order block that we just saw. Okay. Now the reason why all these things are happening is because the market wants to liquidate those that trade resistance and support. Now this is normal trend line. So people that trade resistance and support now will say, okay, the market has come back to touch the trend line again, so it's going to bounce back up. And now what do you see? The market has pierced below this trend line and it is currently trading below it. So when the market is trading below the trend line, the market understands that people have their stop losses below these structures. That's how stop loss are placed. If you go to YouTube now, go and watch how to set stop loss. They tell you to put your stop loss below structures. People have their stop loss below this structure, below these structures, and all of that shit, right? So the market will want to pierce through the entire structures and hit out their stop loss. And that is why you see me have my order below the first structure and second structure. So my first order on ETH should be here. 57,000, I mean $38,080. Okay, $38,080 first order. Now, if this first order fails,